Hey guys, Brian Lebo here, and today I'm with Brad Malkin, president of Noble Home Loans. In this episode, we're going to delve into the ins and the outs of credit and how it affects your mortgage and a little bit more intricate details. So Brad, our first topic is, can you explain to everyone what the difference is between a consumer credit pull, like when you go online and pull your free credit score, versus how the algorithm is different on a mortgage pull?
Sure. It's essentially the same data, but the scoring models are far different. Those free credit reports that you can get at Credit Karma or freecreditreport.com tend to score based on what's called a Vantage model, and mortgage loans are always scored or are currently scored under the FICO model. And so it's the same information, but the scoring model is far different, and so you can see that where there are times where the credit scores differ substantially. Sometimes those free credit report, those scoring models will have a high credit score of up to 900 or 950 points, where with a mortgage credit report, the maximum credit score is 850. The algorithm that's used on those Vantage scores places a different importance on the types of credit. With the FICO score model, it's fairly direct, that you have 35% is based on how you pay your debts, 30% is based on how much you owe, and so forth. And so there's a predictive algorithm there that we can use to also not only identify what your score is now, but also identify if we're looking for an improvement, how much of an improvement is possible.
Interesting. So essentially, the free credit score reports for consumer credit, I mean, it gives you a barometer regarding where you're at, but you can't really take it as the gospel as far as what that's going to reflect when it comes time to pull your credit for an actual mortgage pull.
Right. I think that people tend to be very focused on credit score, the actual number, and that's not always the most important factor, the most germane factor. I think it's a great idea to check your credit, because you should certainly know what's reported. There are times where people are unaware of a medical collection or unaware of a late payment that just got missed by the bank, and it's important to know that. And having the free credit report certainly will identify it, because again, it's all the same data, but it's just how that cake is baked is different than how a cake using the FICO score model is baked. And so seeing what the data is important, and then we can and then you can use the FICO score model when we run for a mortgage credit report, will be the determinant credit score for that loan.
Right, because essentially different loan programs, depending on if Fannie Mae or Freddie Mac is going to purchase it, they have a different requirement for the way that they pull credit, correct?
Right, so with mortgages, the industry standard is that it's based on the FICO score model. Now, there's a movement out there, the people that own Vantage score, of course, are trying to get to both Fannie and Freddie, and they're trying to get with the CFPB, which is the Consumer Finance Protection Bureau, to go ahead and allow them to use a Vantage score. Currently, that hasn't happened. The credit reporting companies, TransUnion and so forth, actually just took on a hefty fine for providing misinformation or setting wrong expectations on what score was going to be used. But not to digress further on that, the current model that is used with mortgages is going to be the FICO score model.
Well, Brad, thank you so much for your time. I appreciate your insight as always. Thank you for watching. Please click to subscribe, and we'll have a new video for you next month.